Crypto markets can rise quickly, but they can also fall just as fast. Sometimes within hours, billions can disappear from the market. So what actually causes these sudden drops? Often, it starts with a shift in sentiment. A negative headline, regulatory news, or uncertainty in the market can make investors cautious. When confidence weakens, some people start selling. Once selling begins, prices start to move downward. As prices drop, more traders notice the movement. Some decide to exit their positions to protect their gains. This increases the selling pressure even further. If prices move against them, their positions can be automatically closed. These forced liquidations can accelerate a market drop. As prices fall quickly, fear spreads. Some investors panic and sell immediately. This emotional reaction can push the market even lower for a short period of time. Crypto markets are still relatively young compared to traditional finance. Because of this, they tend to react more dramatically to shifts in demand and sentiment. This is why large price swings are more common. While sudden declines can feel alarming, they are also part of how markets reset. After strong growth periods, corrections allow prices to adjust and reflect more balanced market activity. For long-term observers, these movements are often seen as part of the broader market cycle. Over time, markets tend to move through phases of growth, correction, and stabilization. Understanding these cycles helps investors interpret price movements more calmly instead of reacting immediately to every shift. Experience in the market often comes from watching these patterns repeat. Price drops may look dramatic in the moment, but they are one chapter in a much larger story. Zooming out often reveals how markets expand, pause, and continue evolving over time. Understanding why markets fall is just as important as understanding why they rise. Because when investors recognize the mechanisms behind volatility, and in a fast-moving space like crypto, perspective can be just as valuable as information. In fast-moving markets, price swings are inevitable. But behind every surge or sudden drop are underlying forces, decisions, reactions, and changing levels of demand. Because understanding the movement is the first step to understanding the market itself.